Hi guys, I'm Chris,
And I'm Jimmy.
and we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week. But we have some extra time, and on this episode, we are going to talk about the FIRE movement. Chris, you want to talk a little bit about sort of what the FIRE movement is?
Yeah, so for those of you that don't know what FIRE is, an acronym, it stands for Financial Independence, Retire Early. So essentially it's kind of a movement of people, they kind of want to just save their money, live frugally for a couple decades or a few years or something like that, and then be able to achieve financial independence, essentially the point at which you don't need to rely on someone else for your income. And then the other half of it is retire early. So essentially you would stop work entirely or reduce your work to a point that it's negligible in your life, and then just be able to live off of your investments or your business or whatever you've established up to the point that you can consider yourself retired early.
This was a pretty popular movement in the years before the pandemic. And I think that since the pandemic, it's really sort of fallen off. Let's talk about some of the reasons why the whole FIRE movement ideology, it's probably dead. The pandemic really changed people's mindsets. I think the pandemic made us realize that life is short. Saving so much and sacrificing so much today for 20, 30, 40 years from now, where we have no idea what's going on, it makes that idea much harder.
Yeah, maybe now it's become the YOLO movement instead of the FIRE movement.
I think a lot of people have been YOLOing. People are traveling more, spending more. It is sort of a YOLO year.
The main component of FIRE was to put their money into something very passive, which essentially is the stock market.
Right.
And we've been having huge gains since about 2008. So that looked very enticing to a lot of people. It didn't require as much capital to get to a point that you could retire. So it made it seem a little bit more feasible, like you could do it in 15 years for some people, 20 years for some people. But now that we don't have that big kick from the stock market, it's going to take you longer. It's going to take you 20 or 30 years to get to the point where you could live off of the 4% rule or something like that. You're going to need at least like $2.5 million, maybe $3 million, depending on what your retirement number is that you need.
After the financial crisis, I think a lot of people made a lot of money regardless of what they invested in. If you invested in just a basic stock market index fund, you made a lot of money. If you went into real estate, you made a lot of money, right? Like everyone made tons and tons of money, probably except for us.
Yeah, except for us.
Since 2008, 2009.
Yeah.
And I think that's sort of what spurred this FIRE movement. It's kind of like people thought it was just really, really easy to just put money somewhere and just get really, really steady gains. Maybe things have changed now, and I think that things have changed now. The Fed has dramatically risen interest rates. The market isn't going to be the same the next 10 years than the previous 10 years.
You're not going to get those huge wins that you would like a 7 to 10% return. Right. You're probably looking at more like 3 to 4%, which is pretty conservative and something that you could maintain over 20 to 30 years and retire. But the whole point of FIRE is to retire early, not to retire when you're 55 or 60. Yeah. That's not really the whole point of FIRE. So yeah, I think at this point, it is for the most part dead for most people. If you are a really financially savvy person, you could definitely still do it. If you are a high income person, you definitely could still do it. But for the average person, for most people, I think it's going to be very hard to achieve unless you really start to improve your investment knowledge. Plug Two Stocky Guys.
When you look at who is doing FIRE, right, you hear about people who are retiring in their 30s, their 40s.
20s.
Right, yes, sometimes even their 20s, really young people, right? And this whole crypto movement has been really enticing to younger folks. You hear these stories about crypto investors who go from zero to millionaires over months, sometimes, right? Yeah. Or maybe a year or two. And then you think about FIRE people who tell you, you need to sacrifice a lot in your life. You need to save as much as possible for years to retire maybe semi-comfortably. The rise of crypto is really at odds with the whole savings for a lifetime FIRE movement.
Yeah, so that's a good point to make. You are kind of usually giving up a lot for the FIRE movement, unless you're a very high income person that, putting away $50,000 a year doesn't really hurt you that much.
Yeah.
But if you're kind of like an average income person, or you have kids or something like that, you're not able to put away that much money. You know, if you have a family, you don't want to live off of ramen noodles and have 4 roommates or something like that. It's just not something that you can feasibly do.
Another thing is that with inflation, saving has become much harder. The cost of food, the cost of groceries, even if you're not going out and buying a new car, even if you're not going out and dining and eating out, even if you're just like doing the bare minimum that you can, groceries have gone up significantly. Rent has gone up significantly, right? So even living with 4 roommates is costing you more now than it used to be. You know, maybe you need to even live with 5 roommates.
Yeah, I mean, that's going to be kind of hard because you can't really predict what's going to happen in the future either, so that's another big problem. So say right now you establish that I could retire, you know, on $80,000 a year. Well, how far is $80,000 going to go in 10 to 20 years? You know, that could be the equivalent of $20,000 right now, so you're not going to be able to live off of that. So the numbers don't really work out a lot of the times. I mean, you are making estimations about the future, which are only as good as the estimator. So, I mean, if you're not very financially savvy, you can easily make a mistake, and then you could get to the point 20 years down the road where you've been retired for a little bit maybe, and then some of your investments fall through, or you didn't save enough, so now you have to go back into the workforce, and you've been out for 5 years. Maybe you can't get the type of job that you had before. You can't make the same money that you had before. You have to readjust to going back into the workforce. You have to change your whole plan around with your life. So that's a big risk that you're taking if you don't really know what you're doing. And I think that's something that a lot of the people in the FIRE movement don't really talk about, because they either are very financially savvy and they've planned for that, or they're not very financially savvy and they don't even know that that's something that they need to plan for.
I think that a lot of people don't talk about the risk of FIRE failure. Not so much about saving till retirement, but once they retire 5-10 years down the line and they run out of money. People don't really talk about that. That's probably because the FIRE movement may be, you know, on the earlier side, that a lot of people who are talking about and promoting the FIRE movement in the last 10 years, maybe they haven't reached that point yet, right? They're not in their 90s or 80s or 70s. There's not enough people who have failed or want to talk about how the FIRE movement has failed. All right, I think that's it. That wraps it up for this episode. All right, guys, please like and subscribe and tune in, because usually on this channel, we invest $1,000 every week into the stock market, and you can come watch us and see us cry or laugh at our mistakes. Till next time.